When you look at equities, you need to keep a straight face. Don't laugh. I know it's an inside joke that the Fed is carrying the market like an infant and we're supposed to ignore that. But it's just so hard not to see the humor in all of this. You came here for the truth, so let me unveil that for you. I have a very quick video for you today. So many charts, but I need to get them to you right away. Let's begin. Nominal GDP adjusted CAPE. Okay, I just covered the CAPE a few videos ago. What we are looking at is cyclically adjusted PE ratios, and it's an important factor when you look at technical analysis, okay? Whether you think that it has a heavy weight or not, it doesn't matter. What we're looking at here is on the left-hand side, multiple of the average, and clearly going even further than what we had seen during the dot-com boom and bust. All right, I'll move on. Profits and valuations. Look at the blue line, that's corporate profits, and you can see where they are today. Compare that to equities, which are going like a rocket ship up into the sky, but corporate profits are not keeping up. And it's not as if corporate profits are not doing that well. It's the fact that equities are just going into outer space. Similar chart here, we are looking at this. I want to read the paragraph there. Requires more than 50% profit growth or 24% compounded for 2 straight years just to reach current price levels by Q3 2019. Current price levels. We have a big problem on our hands and it's not being addressed. Is this the greatest bubble ever? Well, when we compare the Wilshire 5000 to disposable personal income, we see something that has not been seen ever, at least from 1975 and onward. The Wilshire 5000, we're basically looking at all the stocks put together and then comparing that to the average person, what they have in their pockets. You see a very big dislocation that has occurred, and it should be worrisome for people. Now, should I need to mention the fact that who's buying the shares today and what kind of leverage is being seen today? Margin is so huge right now, but it's not being addressed because that's scary. I don't want to be scared, especially before bedtime. Per capita disposable personal income versus the Wilshire 5000. Look at it here if you're interested. Disposable income. I mean, think about that. Literally, what people have cash on, think of it like cash on hand versus the entire stock market. And you see, people are not doing well in the US anyway. This is another way to look at it here. I'll move on. Just $30 trillion, and it's just completely annihilating even the dot-com boom and the financial crisis levels. I mean, it's insane. Chart of the day, I believe this is Bank of America Merrill Lynch, yes. The 2-year note has been riding the strongest trend since 1991. The number of consecutive days that the 2-year yields traded above 1-month moving average since 1990. Okay, just another factor. I mean, this isn't something that I would say, oh, okay, this is it. This is the biggest deal. But it's something to note, right? How many times have I shown you something like this where the market hasn't fallen by 5% in so many days? The market hasn't fallen by these percentages these days. You know, I've shown you those before, and they all start to look very crazy when you pile them all up together. Equity and bond allocations of U.S. public, state and local, defined benefit pension funds. Now, they've been switching over to more and more equities, and what they're trying to suggest here is that bonds are safer than equities. I have a hard time liking either of these, but I just wanted to note, over the years, less bonds, more equities, technically taking on more risk. All right? Now, you know my struggle with that, because I would prefer that they diversify way more. I mean, they could own all different asset classes. I mean, we're talking about these funds that are billions and more, you can buy whatever you want. You have the money. Why are you just holding on to everything that's paper? Why not hold some physical things as well? Why not buy some infrastructure when you got billions of dollars? Why not? All right, last one. This is for everyone from Illinois. The videos that I did about Illinois recently have been doing very well, and I know that a lot of people are very concerned about it. I had to bring this to you, even though it's not really related, but I thought it was very important. More than 30% of their income go to income taxes and property taxes from March 2015 to March 2016, a higher share than residents of every bordering state. And guess what? They're fleeing in droves. You have to remember that. All right. Now, I'll end it there. If you found this video informative, please give me a thumbs up. Support this channel in any way you can. I do appreciate that very much. Last but not least, if you found the video informative, I know that you'll find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. You could actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.